Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, often in a time of pain we seek safety, says Louise Bedford from Trading Game, but she says currently the investing environment is buoyant, and as such, she says the large caps are running cold.
Which means not only is the ASX 20 considered to be a cold sector, but when we look at the 100 as well as the 300 in the next two slides, they are also cold, which is quite interesting. This means that the majority of opportunities are under the ASX 300. And for us to capitalise on this, we need to run our scans as technical analysts across the entire market, thinking that we're doing ourselves a favour by sticking to those high market capitalisations. That won't actually bring in the extra dollars at this time. Now with the ASX 100, when we look at the lower panel, which is the relative strength comparison, we do have that blue line in that lower panel underneath its own moving average. So this is cold as well. And with the very next slide, the ASX 300, you'll see a very similar pattern, but perhaps not quite as broad and indicative. Look at how flat that RSC line is, which is meaning that as we move down through market capitalisation, we've got more of a chance of things outperforming the all odds, which is fascinating to see.
Well, resources stocks have benefited recently from rising commodity prices, and Thomas Atkinson from FX Evolution can see a resurgence in iron ore major Fortescue.
Iron ore, one of the things that's been really exciting about it is that it's often had this run. Viewers can have a look. November, December, January into February, often pretty strong period for the iron ore stocks. It tends to run into the Chinese New Year, which for whatever reason has happened before. And we've got a breakout here in one of our favorites, which is obviously FMG. It's been sitting for a long time. We've talked about its bullishness over the last couple of months coming into this event. And now we've got a breakout here, which I think is pretty clear above that $20 marker. And that kind of signals that maybe we might see a resurgence in iron ore stocks, possibly up to maybe FMG can get back into those 26s again from the technical zone. BHP, Rio, they've all been kind of improving as well in recent times. So it's exciting for the metals that haven't been on the forefront of the boom that's had for the last 3 months. So the silvers, the golds, the precious metals. This looks good for the rest, and that's why I'm not as bearish on the ASX 200, because these stocks are big parts of it.
Depressed energy prices have weighed on the local energy sector, but Thomas Atkinson sees reason for optimism in the largest stock, Woodside.
This has been a very disappointing stock for many people for years now, but I've really liked it as that bullish breakout level, which is about $23.60. What that signaled to me was that maybe the negativity, sorry about that, maybe the negativity going around everything with energy is starting to dissipate, and we're actually starting to see even oil barrels improving a little bit and hitting key supports. Now, this is a very geopolitical trade in terms of the barrel price. We've got natural gas here at play as well with Woodside, but I do see some encouraging signs. Early days here for traders, but certainly a good level. Of course, 27 being a major target here, and above 27 being very bullish for the stock. So maybe Woodside and other energy stocks are starting to show a little bit of a turnaround. Early days, but I think it's a sign of encouragement for sure.
And that's it for this week's edition of the Charts to Watch. Join us for more technical talk next week. Happy trading.